Good afternoon. My name is Jennifer Chandler. I'll be your host today from the National Council of Nonprofits. We're excited to welcome you today to our special national webinar on the very important topic of costs. After this very brief housekeeping slide explaining that your lines are muted, and then a copy of today's slides and the recording will be available to you after the program, I'll be telling you a bit about the National Council of Nonprofits and our state association network, and then introducing you to our guest speaker. But I first want to share with you how you can send us questions and send questions to the speaker and contribute to the conversation about costs in the charitable nonprofit community. If we could just go back to the other slide, that would be great. Today, by using the chat box on your screen, you can pose a question, and as time allows, we'll try to answer it. It may be that we'll have to address your particular question after the webinar. We'll try to be as responsive as we can, and we'll see how many questions we get and what makes the most sense as we're moving along with the presentation. The National Council of Nonprofits will also be posting resources related to this webinar on our website, so some of your questions may be answered there. And meanwhile, if you'd like to tweet, you can contribute to the conversation about the importance of cost today or anytime using the hashtag #OwnYourOwnCosts, all in one word, on Twitter, or by tweeting to or about the National Council of Nonprofits. And we'll find ways to connect with you also, we hope, via our newsletter and on social media. And all of those ways to connect with us are on the final slide in today's presentation. So I'm going to be helped in advancing the slides by my friend Ryan Myers, who's a staff member of JATASA, and I'd like Ryan to go to the next slide, please, which is the map of the U.S., which shows that our network is a national network comprised of state associations, capacity building organizations, mission partners, and over 25,000 individual charitable nonprofits that have joined their state associations of nonprofits around the country. Thank you, Ryan. Let's show the next slide. I'd like to take a few minutes to just explain that this network of state associations and charitable nonprofits and those that support them exists to advance the vital role of charitable nonprofits in our lives and in our communities, and to help them build their capacities to advance their missions. And we do this by encouraging nonprofits and board members to be advocates by spotting trends and sharing knowledge that nonprofits need to survive. And that's one of the reasons why we're really excited about the topic today about costs and owning your own costs. Next slide, please. So that your nonprofit can be one of those described as effective and fiscally sound, you really need to show that you're accomplishing your mission, as well as that your financial accounting is transparent and that your expenditures are prudent. I'm sure everyone's aware that there's a very understandable focus on outcomes. So if we can educate others about what outcomes actually cost, we'll be in a better place when donors who focus on outcomes look to us to explain what we're accomplishing. Let's look at the next slide. I'm sure you are also aware that the costs that you need to accomplish your mission are very elusive sometimes. So some of the presentation later may be a challenge, and we're going to try to break things down so that you in an understandable way, so that you can identify your costs and then allocate them in a way that will help you tell a story about the outcomes and the accountability focus of your charitable nonprofit. Once you know what your costs are, you can explain it to others, such as board members and donors and other sources of funding that are investing in your mission, and that will help your nonprofit be in a better position to thrive. It's a good thing for those who invest in your mission, such as private foundations and even government, to know what it costs. And they also expect to know that you'll be transparent about how you're using assets and donations. Next slide, please. But as I'm sure you're also aware, instead of focusing on effectiveness and transparency and what the nonprofit is actually achieving, some groups that keep an eye on charitable nonprofits and rate them have only given high marks to those nonprofits that keep costs really low. Ironically, low costs do not always equate to high effectiveness. So it's up to all of us to start educating the public and our donors what it costs and that it really does cost something to deliver your mission. Next slide, please. We think that eventually there will be a culture shift and that the donating public will not have a knee-jerk negative reaction to any and all costs, but instead the focus will be on whether a nonprofit is effective in solving problems in communities and advancing its mission, and whether the costs needed to get that done are reasonable. But it's always up to the nonprofits to show that those costs are essential and reasonable. And there's another reason why knowing our nonprofits' costs and allocating them correctly are really important. 1/3 of the charitable community's revenue comes from governments. And new federal regulations will soon require governments at all levels to reimburse nonprofits for some amount of their indirect costs when federal money is involved. So nonprofits with government contracts and grants that know their indirect costs will be in a better position to take advantage of these new federal regulations. And these new rules are contained in something called the OMB Uniform Guidance, which is not the topic of today's webinar, but we wanted you to be aware about this new issue that affects all charitable nonprofits. It actually affects nonprofits that do not receive government funds and government monies as well. But if you want to know more about the OMB Uniform Guidance, you can contact your state association of nonprofits or the National Council of Nonprofits and stay connected with our newsletters, and you'll be hearing more about this new federal guidance as it unfolds. It will be effective at the end of this calendar year, so we'll be hearing a lot more about this as time goes forward. So now, without any further context or background, I'm very excited. Let's go to the next slide and take a look at who our guest presenter is today. Jeff Russell, who is the CEO and founder of Jitasa. Let's go to the next slide. We can see all of the clients that Jitasa is currently serving, and we can see that their values are in line with what we might expect from those who know a lot about costs in the nonprofit world. Our guest presenter today, Jeff, whose picture you see right here, is the founder of Jitasa and has been a friend of our national network of state associations of nonprofits for several years. And when we thought about this topic, we immediately thought of Jitasa and Jeff to help us explain why it's so important to own your own costs. Jeff, thank you.
All right, thanks, Jenny. I appreciate that. So let's jump right in. Today we're going to basically go through three key areas. One is putting the cost in context. So we'll talk briefly about what this means for your organization, why this is important. My guess is if you're on the webinar, you understand that it is important. Then we'll talk kind of the blocking and tackling. How do we actually create this story? How do we create an accurate story around our finances? And then we'll close out with how to tell an accurate story. And throughout, feel free to put questions into the chat tool. We'll monitor that and answer those as we go. So please feel free to use that along the way. So the first key point is, for a nonprofit, financial sustainability and program sustainability cannot be separated. You can have the best program in the world, but if you run out of money, you're not going to help anybody. And the same token, you can have a very rich, profitable nonprofit, but if your program is not very useful or is not very helpful, then why are we doing it? So it's really key to have both of those things together. And so as we're talking more about the finance side today, it's important to recognize the reason we're talking about cost is for the outcomes and the programs and the mission that we all serve. There's a great book out by Gene Bell, Jan Masak, and Steve Zimmerman called Nonprofit Sustainability. It's a great read when you're going through strategic planning process, annual budgeting process. I really encourage it for all nonprofit leaders out there. It's a great book. This cartoon might strike a chord with some of you. It's a little boy saying, hey, how much of Robin Hood's money went to fundraising expenses and campaign contributions, and how much actually went to the poor, right? So there's a lot of talk around costs and which costs are valued and which costs are not, right? And so part of this discussion today is just really, the topic, own your own cost. It's saying, hey, we're going to own this. We're going to own that this is what it takes to achieve our mission. And we want to move the conversation into that and away from, kind of this little boy's question. So where we're going to end up is we're going to end up with a statement of functional expenses, and it's basically a detailed explanation of your cost, and it'll break out into kind of 3 general categories: your program or programs-related cost, your administrative-related cost, and your fundraising-related cost. And we'll talk about how we're going to track each of those separately. We'll dive into a lot of detail around this. But this is basically where we end up at the end of the hour, is you should have a kind of a roadmap for how you get to this report and this analysis, and that's really the key thing. You have to be able to get to this report to really truly be able to own your costs and be able to talk about it in a coherent fashion. So one thing on cost, I'll touch on this before we jump into the mechanics. It can be really confusing. And one of the main reasons it's really confusing is we use somewhat similar vocabulary, but there's 3 different groups that talk about costs and deal with them in a slightly different way. It's close enough that it feels confusing that they're kind of overlapping. So the first is the IRS, right? So they come out with a Form 990. That's a disclosure document that every nonprofit has to file. You file it with the IRS, and how they define costs and talk about costs is a little bit different than federal government contracts and federal grants or state grants or local grants. These reports to governments, they'll have you define costs in a slightly different way. And then there's also the charity, some people call them watchdog groups, that rank and evaluate nonprofits based on the data they put in the 990. All 3 are looking at the same underlying numbers, but they're talking about them in a slightly different way, and they're communicating them in a slightly different way. So this is one of the reasons it can be really confusing for a nonprofit leader and for board members. Unfortunately, these are 3 very different groups with different agendas, and getting them onto a common set of standards is not likely to happen. So we just wanted to acknowledge this and say, hey, here's part of the confusion and part of the reason. And so when we're talking about costs, you'll hear me say several times that the devil's in the details. And the devil in the details is because a specific government contract, may be the wording or how it specifically asks for a report, is probably going to be different than what's in the IRS Form 990. And so really understanding the devil in those details is key. But with that in mind, we'll come out with some generic definitions here to just kind of help the process. So the first is the program cost. So these are the costs that are incurred in connection to a very specific activity of the organization around its mission. You may or may not refer to this as a program. Some nonprofits do, some nonprofits don't. But it's the things, it's your charitable purpose, it's the mission, it's the cost, the time, the energy that goes into the purpose of the organization. Then there's fundraising costs, and those are the costs that involve seeking, soliciting, or securing contributions. Anything around that comes up as fundraising. And then the last is management and general costs, often referred to as administration costs. This is basically everything else that's needed to operate the organization. So your test is this a program cost? Is this a specific activity of our purpose and mission? If not, is it a fundraising cost? And if not, therefore, it's a management or administrative cost. So you kind of go through that checklist, and we'll talk about exactly how we're going to do that here in a minute. The last thing I'll touch on, and this is probably the most confusing definition, is around direct costs and indirect costs. One of the reasons this is exceptionally confusing is because how it's used in the for-profit world is somewhat different than how these phrases are used in the nonprofit world. So it can be really confusing to someone who's switching between the sectors, such as a board member. And so you start talking about direct costs. That's going to mean something different to somebody in a manufacturing environment than somebody in the nonprofit environment. But again, direct costs generally in the nonprofit world is referred to as costs attributed to a specific program. So an example of this might be the cost of renting a basketball gym, and the entire purpose of renting that gym is for your after-school program. So that's a very direct cost, directly attributed to your after-school program, and that's a pretty clean accounting transaction. The other is indirect cost. This is most frequently referred to in government grant contracts. This is generally costs that are allocated across functions. So an example might be a staff member who works on 3 different programs. And so you want to see the cost of each of those programs individually. That person's salary might be split 40% on one program, 10% on one program, and then 50% on the other program. Or you might have an executive director who's 50% in the after-school program and 30% fundraising and 20% management. So those are indirect costs where they get spread across the organization. And again, here, these are just introductory definitions. The devil is absolutely in the details on this, but that gives you a general sense of, when you hear these phrases, what people are talking about. So what we'll spend most of our time on today is this next section. It's how to create an accurate story. And this is where we'll really kind of get into the methodology on how we get to those costs and how we get to tell that story about what our costs are and how they're allocated. So first, I want to acknowledge that the role of an executive director, the role of nonprofit staff, is incredibly difficult. It's a very challenging role. And you're called on and asked to do a lot of different things. I know I'm married to an executive director. My wife is an executive director, runs an organization that helps refugees, and I see all the different demands on her time, right? She's getting pulled one way by the board, one way by donors, one way by volunteers, and then there's actually the beneficiaries that she's working with, the refugees. They have demands on her time, and so she's really getting pulled in a lot of different directions. And so what we're going to talk about today is, you may kind of go, man, this is just like one more thing on my to-do list, and we just want to acknowledge that, but we definitely feel that this is something that, done properly, is just a key ingredient to a strong, successful organization. The other big challenge in the nonprofit sector is just getting the right level of expertise. The middle bullet here, nonprofit accounting, is a lot more complicated than for-profit accounting. I always say that nonprofit accounting has all the tenets of for-profit accounting with another whole layer of complexity wrapped around it. So getting that access to that expertise, finding volunteers who really understand the sector, finding accountants who understand that, it can be really challenging. So what we're going to walk through today is a fairly structured methodology that, with your understanding of the nonprofit sector, we really feel that anybody can do, even non-accountants can work through this. But we just want to acknowledge that you guys are stretched and pulled in a lot of different directions. So the core methodology and how you're going to create your story is, we call it build, run, analyze. And the key is to get your systems and processes and technology built properly up front. And if you get that structure in place in the up front, then as long as you run it consistently, the analysis and the reporting and everything should really just fall out of the accounting system. So we're going to spend a lot of time in that build phase, because that's really the key ingredient. If you get your system set up correctly, you get your policies and procedures in place, as long as you run it consistently, the reporting, the analysis, and everything should really fall out of it. So when you're thinking about your financial systems, no matter what size organization you are, there's really 3 key components. There's the people that are actually doing the work, there's the financial processes and systems, and there's the technology, right? And so the people that you have, right, that can be a freelance bookkeeper, that can be in-house staff. There's a variety of different people who can actually do this for you. It could be a treasurer, right? There's a whole mix of people. And the key around the financial processes and systems, and we'll talk more about this, we'll go into deeper detail, but they should really be flexible to your organization, right? You don't just want to get a boilerplate template off the web and say, these are our processes, right? Every organization is different. There's uniquenesses about each organization. So you want want it to be flexible to your organization. The next thing is flexibility doesn't mean it's flexible month to month. What I mean is it can be different than your neighboring nonprofit. Once you put in those processes, they really need to be consistent. You need to follow them month after month after month after month. And that's where it really takes discipline. It really takes discipline to follow that through day to day, month to month. The last thing, probably the most important thing, is really make sure you have appropriate checks and balances in place. The fraud and having controls, those are things that unfortunately can often make headlines. And there's some pretty simple controls you can put in place that really, again, an organization of any size should have in place. I'll talk about technology here on a few slides. So the other big activities, so once you get your people, you got your processes, you need your accounting system. And the backbone of your accounting system is what's called the chart of accounts. So that is a listing of all the different types of transactions you're going to have: salaries, office supplies, rent. When you look at a financial statement, it's usually the stuff that's running along the left side. That's what your chart of accounts is. So having that built properly, flexible, with best practices, that's going to make everything so much easier. And so if you've got kind of a complicated or misaligned chart of accounts, everything's going to be difficult. So we always start here. This is what you want to make sure you get done accurately. So let's talk about this. What you want is you want it in an accounting system. The vast majority of nonprofits use QuickBooks. I always tell people, it is a great system. It's affordable. It meets a lot of nonprofits' needs. There's generally, if you're a smaller nonprofit, there's not necessarily a need to really do something much more complex. There are other great systems on the market. One's called OneNFP. It's a great tool for those organizations that have more complex grant tracking, more complex allocations, or if you've graduated from QuickBooks, it's a really good tool. There's one called Aplos, which is a really simple cloud-based tool. So there's a variety of accounting systems you can use. And once you get that accounting system, that's when you put in your chart of accounts. And the National Center for Charitable Statistics actually has published something called the Unified Chart of Accounts, or the UCOA. And the link there is where you can download it from the Urban Institute. And what they've done is they went in and looked at the finances of hundreds and hundreds and hundreds of nonprofits. And they created a chart of accounts that would really work for any nonprofit in the country. So it's a very comprehensive, very thorough. It's a great place to start. However, the UCOA is designed to work for all nonprofits. It's not designed to work for your nonprofit. So I always tell people it's kind of like killing a mosquito with a sledgehammer. All right, there's 700 lines. It's way too complicated for most groups. So what is nice about it is it kind of has a nice accordion structure. You can expand it, you can shrink it. There's a lot of flexibility to adjust it as we go. And you can view it, you can use the class system with it, so it works well within QuickBooks. So you can really use it as a starting point for your organization, but we really encourage people to customize it. So once you've got your people, you got your technology, you got your chart of accounts set up, then you got to think about how you're going to manage that and how you're going to run it. And the key to financial statements, and I know this is going to sound simple, but the key is accurate and reliable data, right? Garbage in, garbage out. So if you're not tracking the transactions correctly, then the reports are going to be no good, right? So it's at the point of entry is where it really matters. Garbage in, garbage out. The other thing is it's really important, we have up there, it says run consistently. It's really important to have the discipline to do this on a regular basis. You should be monthly or depending on your size, we encourage monthly, closing your books, reconciling your bank account, reconciling your donor systems, and doing that monthly. If you wait 3 months, 6 months, that's not a best practice. You'll forget what those transactions are. What was it that happened back in March? I don't remember. So we really encourage discipline to do it on a regular basis, really no matter your size. So as you're with that premise, garbage in, garbage out, how do we make sure that we're not putting garbage in the system? So the key to get the regular and reliable reporting is we're going to accurately capture the transactions, and we're going to record it at the transaction level. So a lot of times people throw stuff in QuickBooks, and then they spend all their time manipulating reports in Excel and doing all these things sort of after the fact. And so what we say is it's at the transaction level. You got to get it right there, and the reports and everything should really just sort of fall out of the system. So the hard work is in having that discipline to do that on a day-to-day, week-to-week basis. So you capture the transaction, you capture the necessary layers. We'll dive into exactly what that means. And then you have these different views depending on what sort of allocation or report you need. So when you're accurately capturing it, just at a very basic level, there's a transaction, right? There's a $35 purchase. So was that a revenue or expense? Okay, that was an expense. It happened on September 15th. It was for $30, and it was paid to Citrix go-to meeting. The expense account code is office supplies, right? So just a very basic element. And that's where for-profits generally get to stop. They say, yep, we got it, we're done. The problem in the nonprofit sector, why this is more complex, is there's all these additional layers that you want to track, right? So the whole thing here we're talking about is owning your costs, knowing how to allocate your costs. So at the transaction level, you want to say, was this $30 purchase? Was this associated with our after-school program? Or was this a fundraising cost? Or was this something that was, was it for the board meeting, so it's an administration cost? On top of that, you can have a program that might be supported by 3 or 4 different funders, maybe 3 or 4 different grants. So then you've got to know, okay, so this $30, which grant report do we want to track it to? And so it's at the transaction level, you want to record all this detail. And it can feel and sound tedious, but if you're doing it after the fact, it's very difficult to do. And so we really encourage people to do it at the moment of bookkeeping at the transaction level. I'll say just a particular note here, government contracts, government grants are particularly complicated and particularly complex. And this is where the devil is really in the detail. These federal grants, they might have a 20-page report describing the reports they want. And depending on the organization, depending on the funder, federal grants are not all the same. A different organization may have different requirements. And so the devil is really in the details to dig into those documents and understand what they're looking for. And we have examples where we often go back to the government agency and say, hey, this isn't clear. Before we spend a year tracking this for you, walk us through exactly what you're looking for. So you want to do that type of work up front before it's too late and before it's the night before the deadline and you're scrambling trying to put together the report. So once you do that, if you capture that at the transaction level, and that's really the key in this run phase, is then you can run reports of all different things. So you want to see your total expenses in travel, and you can break that out by program. Travel for program 1, travel for program 2, and on it goes. And then you can slice and dice it a different way, right? You can say, I want to look at this by donor. I have all these different donors who funded me in 2013. What does that look like? You can do it for a funder, a grant, right? You can say, how do my expenses line up for this particular grant? And then again, if you do it at the transaction level, you can slice and dice that different ways, right? We can have donors who gave to 1 year for a multi-year program, another donor who gave it in a different year for the same program, and it all rolls up. And you could add a 4th layer, right? So you could look at by year, by expense, by donor. And so the key to be able to kind of slice and dice it a variety of ways is, again, if you track it at the transaction level, these reports should really be able to fall out of the system for you. So let's talk a little bit about how you actually allocate that expense. So when you get into the system and you're sitting there looking at a transaction and you go, well, I'm not quite sure. Was this fundraising or admin, or how do I allocate this? So there are some general guidelines, but the primary one is how you spread out your expenses, how you allocate must be documented, reasonable, and consistent. So as long as you're saying, the most popular method is based on the employee's time. And so when you're sitting down kind of going, my executive director spends half their time on programs, 30% on fundraising, and 20% on admin. So you can't just decide that at the end of the year because that's what makes your numbers look good. That allocation methodology, that process, how you arrived at that, you need to document why that is. It needs to be a fairly reasonable assumption. And then you just need to apply it consistently throughout the year, right? So auditors and groups don't like it if you're changing it month to month, quarter to quarter. Once you document it, come up with a fairly reasonable way to allocate it, then you want your executive director, and generally if you have an auditor, it's nice to get sign-off from the auditor that they feel that that's a reasonable way to allocate. You can also involve your board treasurer. I always think it's great to get board engagement. And then so there's really not much more specific than that. There's a lot of different things that you can allocate. Generally, people might allocate salaries. Sometimes people forget that people can be split across programs, or they can be half, an office assistant. Maybe you think, oh, okay, well, that's just an administrative expense. Well, if a third of the time she's helping schedule the after-school program, well, no, actually that third of the time could be allocated into programs. So you can look at salaries. Generally, that's done as a % of time spent. Some grants require you to have very meticulous time tracking. Some don't. So that's where it devil's in the details kind of thing. Contractors, rent and utilities. My example earlier about the basketball gym. So if your office is, primarily used for administrative things, but, once a week you have a training program that takes over the facility, well, then you can allocate a % of your rent and utilities can go towards programs. Or if you have a facility that's half training and half office space, you can make those adjustments. Generally, that's done on, % of the time the building is utilized. Some people just do it by square footage. So if you're a school, you can split it between, your middle school and your high school. So there's kind of different ways to do that, sometimes square footage, sometimes in how it's used. Office expenses, supplies, those are not default administrative expenses. Maybe it was used to print flyers for a fundraising campaign, so those things should go towards fundraising. Gifts in kind is an area that's often overlooked. So if you're an organization where you get a lot of donated goods that you then pass on to beneficiaries, right, gifts in kind, just like salaries or just like any other expense, need to be allocated across those programs. So there's really a whole, you can just go down the entire chart of accounts, and most things you can allocate or split, or you need to make sure that they're assigned in a particular way. And again, all of these things, as you go through that list, just document what your methodology is going to be, check with your auditor, make sure this is reasonable. If you don't have an auditor, check with your treasurer, and then make sure that you just apply it consistently. So the last thing we'll talk about is once you have built that infrastructure, you've got that core there, then you're running it consistently, we're recording it at the transaction level, the analysis should really just fall out. So if you find yourself spending a lot of time in Excel, manipulating things, scrambling to get reports created, there's something fundamentally off in how your system is configured or built, or fundamentally in how you're actually doing your bookkeeping. So don't spend your time manipulating the report. Go back kind of upstream and fix the root cause. Once you have that fixed and the reports are falling out of the system, we encourage people, because we're reconciling our books on a monthly basis, we're closing everything on a monthly basis, you should really be looking at the financial reporting on a monthly basis. If you're a really small nonprofit, say, under 200,000, maybe quarterly is okay and makes sense. But we encourage people, again, you forget what happened 3 months ago, 4 months ago, 6 months ago. So we really encourage monthly as much as possible. So there's some monthly activities that you're going to do, and then there's the year-end activities. So all of this discipline, and all these things we did to get our accounting squared away, that's going to make filing the 990 much easier, much cleaner. If you have to go through an audit or a financial review, your books are in shape for that. There's nothing to worry about. And then probably most importantly, back to the very first thing about nonprofit sustainability and program, when you go into your budgeting process, if you're looking at reports that aren't accurate or don't accurately tell you what your costs are, if everything's just lumped into one program and you can't tell, is my after-school program doing better, or is my daycare program doing better, is my Sunday afternoon program doing better, if you can't tell that in your numbers, it's very hard to go through a strategic planning process or a budgeting process. So those numbers and analysis really help you do that. The 4 reports that, at a minimum, we encourage everybody to look at on a monthly basis. One is your statement of financial position. For those who are crossing over from the for-profit sector, that's your balance sheet. Most nonprofits really focus on the statement of activities or the profit and loss. We really encourage people to get comfortable and familiar with the balance sheet. That tells a lot about the health of your organization. It talks about your cash, your liabilities. So that's an important document. Often people don't want to look at that or don't like looking at that. We encourage everyone to get comfortable looking at that. The statement of activities in the for-profit world is called a profit and loss statement. That is, that's really where your revenue is going, where your expenses are going, do you have positive net income or not. One of the things I'll say about the terminology is board members often get very confused. You come in, you start talking about a statement of financial position, and say, oh, geez, well, it just looks like a balance sheet to me. Audited statements are going to have these things on the left. They're going to have the nonprofit terminology. So it's just something that you kind of have to continually educate people on. But we really encourage people to stick with the nonprofit terminology because that's what GAAP is, that's what auditors will do, and it's important to get everybody comfortable with that. The third thing is budget versus actuals. We really encourage people to have their budget put into their accounting system. It can maybe take a little while to enter it on a monthly basis, and then you're able to run budget versus actual statements. So if you go through all the pain and hassle of creating a budget, you want to do it where it lines up with your chart of accounts and it's easy and simple to put into your accounting system. And then the last thing that you get, which we started out saying, hey, if you can own your costs, know your costs, control your costs, then you're going to get a statement of functional expenses. And so that's the ability to look at everything we've been talking about, to look at your program 1 versus program 2 versus program 3 versus administration versus fundraising. So now we'll talk a little bit about what these things can look like. I'm walking through a couple of slides here that show pictures. One of the things most nonprofits, I believe, just print out a QuickBooks report and you present, a grid of a bunch of numbers. Everybody gets lost. So these are just some charts and graphs that you can tell stories through the picture, right? So here's the financial position. You see this organization, the orange is the cash. The cash went down in the middle of the year, but the fixed assets went way up, right? So that tells a story like, oh, they went out and bought some machinery or equipment or cars, or they invested in their camp or whatever it is, right? And so, these are fancy-looking pictures, but you can do this exact same thing in Excel, right? There's great chart functionality. So we encourage people to just spend a little time telling your story through pictures, not necessarily just through numbers. So if you look at this, this is a statement of functional expenses. Again, you can see how much is in programs, how much is in admin, how much is in fundraising. So this is ultimately the picture that you want to be able to tell for your organization. All right, with that, I will launch into a little bit more on how to tell your story. So we know that the understanding your cost is really a key component, building it correctly, running it consistently, and the report should really fall out of it. So we're only as good as how we actually tell this story, right? All of this work we went into, it's a shame to not be able to effectively communicate it. You don't want, like this board member here, falling asleep at the table, right? So what several things we talk about. One is just be consistent. When you settle on a format, show that same format month after month, quarter after quarter. People get used to it. They get used to know, they know where to look for numbers. So it's really important to be consistent. Don't switch it up too often. Next is really keep it simple. You know, particularly with your board, particularly with funders, they want to see the big picture. They want to see the story, and then they can dive into the details if they want. But, you know, keep it as simple as possible. The third thing is send a preview. Send the financials out in advance of your board meeting. Send it out in advance of your meeting with the funder. They really appreciate the chance to just, even if they're only going to spend 5-10 minutes with it, often I know board members don't even look at it, but the fact that you sent it is a sign of transparency, and it's a sign of, hey, you know, we've got our act together. Here, take a look, dig in all you want, and then we can talk about the highlights. And the last thing is just, you know, prepare and relax. I know that I would be very uncomfortable, right? I'm comfortable talking about numbers. I would be incredibly uncomfortable talking in front of my son's third grade class. But if I prepare and I think about what I'm going to say, it makes me much more comfortable going in and talking about, you know, how trees grow or whatever the topic would be. So it's the same with finances. I know it can be an intimidating topic. I think a lot of times people get nervous about what questions are going to get asked. So the more you can prepare, the more you can understand your numbers, and the more you own your cost, the more you understand it, then the better you're going to feel presenting it. Talk a little bit about the keeping it simple. One of the things that I know frustrates a lot of board members or a lot of executive directors is they go into the boardroom and, you know, some guy in there drills and he's like, so why are office supplies up $3,000? And what you really want to talk about is something very different, right? So this is what I say, don't copy an entire Excel spreadsheet and send that to them, right? Really put it in charts and graphs. You know, here's some really simple charts that came out of Excel. You can do this. If you show it in pictures, you control the conversation. So you don't want them diving into, you had to renegotiate the office supply contract, right? What you want to talk about is, hey, revenue's up, expenses are down, this is happening, you know, because of the water shortage, we're getting way more people coming in for this. Like, you want to be talking at that level at your board, not about the devil in the details. So if you provide them an executive summary, you provide them pictures, you're going to put yourself in a position to control the conversation much better.
Hey, Jeff, this is Jenny, and I'm on that great slide with the two charts that you just are showing us now.
Mm-hmm.
Can you just walk us through on the right-hand side where it says G&A, fundraising, programs? Those are costs, right?
Correct.
And in terms of,
so,
go ahead.
Yeah, so, you know, the reason there's some that are more than 100% and some that are less than 100%, these are costs as a percent of revenue. So in January, they spent more money than they brought in. In March, they spent less money than they brought in. You can also look at that as a percent of cost, right? So you can have another chart that shows fundraising, programs, administration as a percent of your total expenses. So different people like to look at it different ways. You know, it's a nice to be able to tell that story in a very simple way and how it changed over time. So for example, this organization, they had a big fundraiser in January, but they did less fundraising activities in March. So you can see that fundraising expense dropped.
Great. Thank you.
Yeah, you bet. So the last thing, I'll close out here with a couple of slides. We'll open it up for more questions, and I think Jenny's going to bring it home for us. But, you know, as you're talking about costs, as you're telling your story, you know, one of the most important things is I think we as a sector, you as a nonprofit, you have nothing to hide, right? We need to own it and be very transparent about it. So I always encourage people to over-communicate on finances, right? Provide your board with detailed, regular financial reports. Even if your board meets quarterly, send the reports to them monthly, right? Same thing with your funders. If your funders ask for an annual report, you know, send it to them quarterly. If they tell you to stop, then stop. But the idea is if you over-communicate and over-deliver in this category, it's a really strong signal of transparency and how comfortable you are with your information. The other thing that's definitely a trend in the sector is to start posting financials on your website. You can post annual reports, post annual financial reports. We have clients that even publish their financials monthly on their website. When you go through an audit, that's a great thing to put on your website. It's a signal of great transparency that says, hey, I'm sure there's some things in the audit we could have done better, but we're going to put it out there for everybody to see. The last one, your financial policies, put those on your website. Every time you have a volunteer, staff, make sure you distribute a copy of your policies. You can't over-communicate enough, and just the more transparent you are, the better off you're going to be. Speaking of policies, as you're talking about control, talking about cost, it's really important that you actually have financial policies. Make sure you have a travel expense cost reimbursement policy. It's important to say this is not just for staff. If you reimburse the board, if you reimburse volunteers, make sure there's an authorization there. We see cases where a board member assumes that the nonprofit's going to reimburse, and then the nonprofit doesn't want to reimburse. It creates conflict. So make sure you lay that out in advance. Say, here's acceptable expenses. Or you can say any expenses that need to be reimbursed have to be pre-authorized. You've got to ask for permission in advance. If you spend it and then you ask us, our policy is we don't reimburse it, right? So when you have those policies, it actually protects you, the executive director or the nonprofit, from confusion or unclear expectations. Travel costs are always a big area. The key one here is just remember the optics, right? You want reasonable but not excessive cost. That's going to vary depending on the size of your organization, the sensitivity of your donors. But if you're staying at the Ritz-Carlton in Manhattan, they may raise a few eyebrows, right? So no one's expecting nonprofits to not travel, but this is an area that people can be particularly sensitive to, and wonder why you're flying first class or whatever it is, right? So again, back to transparency. If you're okay with this being, on the front page of the newspaper, then you're okay doing it. So just keep in mind, with transparency, there's some accountability that comes with that. The other couple of big areas is around cash. So if you have petty cash in the office for, paying volunteers for minor expenses, petty cash for helping beneficiaries. If you have donations, if you're collecting cash, or if you have checks that get mailed into the office, there's a whole system and level of controls that you need around how you handle that cash and donations. This is an area where there are good templates out there on the web who kind of can help you think through these policies and procedures. The last one, again, compensating employees. Back to transparency, keep in mind you want to have a defensible policy around compensation. I'm of the opinion that the vast majority of people in the nonprofit sector are underpaid, and we should be fighting for more reasonable expectations around that. But same thing here, it's kind of like the optics of travel costs. You want to be where you're at market, where it's reasonable, but you certainly don't want to get in a position where you're embarrassed by the salaries you're paying. This is not a problem that most nonprofits have, but it's certainly something that you need a policy around. You need, maybe every couple of years you do a simple HR survey. I know there's a lot of state associations who publish data around salaries in their state, so those are always a great resource, and I'm sure the National Council of Nonprofits can help point you in a direction around compensation policies. Then lastly, budgets and funding proposals. So when you're talking about costs and you're going in for a funding proposal, don't underestimate or underallocate what the real cost of this program is. So if a funder wants you to start a new program, think about all the costs associated with that, the increased overhead, the increased administration costs, not just the pure program cost. And really work with the funder, explain to them, and don't shy away from talking about the true total cost. They may decide that they're only going to fund half of it or a quarter of it or a third of it, but don't shy away from explaining, like, hey, look, here's the full cost of running this. Here's what this is going to take. And I think that sometimes, as you're talking to a funder, I know you can, as a nonprofit, you can get a little gun shy. You're like, oh, that number sounds too big, or it doesn't sound right. But if you really have accurate cost accounting, then you can go in and very confidently have that conversation. Last thing I'll say is, we are all advocates, and this is an important area. When you're out and about in the world, speak with your donors, speak with community. I know a lot of us get to do a lot of public speaking. Make sure you're talking about the importance of cost along the way. And we collectively can educate the donating public that costs are cool. And there's a great article by Bridgespan talking about cost, and that kind of walks through the importance of cost. Last thing is the Council of Nonprofit is going to put together a tip sheet, and that'll be on their website to talk about how costs are, give you some tips and pointers on how to chat about cost.
Thanks, Jeff.
Yeah, you bet.
No, but I didn't mean to cut you off. I've got a question while we're waiting for other people to type theirs in the chat box. But go ahead before before we ask you questions. Tell us how to get in touch with you.
Yeah, you bet. So I was just going to say, here's my phone number, email address. Feel free if you've got specific questions. Like I said, the devil is in the details on these things. And if you have a specific question, feel free to shoot it to me, and we'll be glad to help.
Thank you so much.
All you, Jenny.
Thank you. And Jeff, I really appreciate the way you put costs in the context of issues like transparency and accountability and evaluating compensation and the appropriateness of that in in all of our work. So thank you for putting costs in context. Now I do have a devil in the detail question for you. Going back to when you were helping us understand the how to use accounting software like QuickBooks, etc. What is your guidance on adding more costs? Like, there are going to be certain types of costs that we'll probably all understand and be able to really identify with, like rent or salaries. But what happens when you start like adding a lot of extra, very unique costs? Is that a good idea, or is it better to keep them in bigger buckets?
Yeah, I generally encourage people to keep them in bigger buckets because you can always drill into the transaction level detail if you want.
Mm-hmm.
It's kind of the 80-20 rule. Most nonprofits' salaries are 80% of their total cost. So you want to have a really good handle on that and have that really be well allocated. What I sometimes see in chart of accounts is where people have a transaction, maybe they have 2, 3, 5 transactions a year. They don't know quite where to stick it in their chart of accounts. And so they...
we won't lose you. We know you'll plug in for us.
I just had a little panic there.
Don't worry.
So where people end up just creating a line in the chart of accounts when they kind of don't know where to put it. And so the nice thing about the unified chart of accounts that we talked about earlier is that's got a category for virtually everything. And it has the structure where you don't have those kind of, I don't know where to stick it cost, right? So that's where if you're getting those sort of costs and you're getting really granular, if you don't have, I would say, you don't have 30, 40 transactions, or it's not, 5% of your total cost, it probably shouldn't be a separate category in your chart of accounts.
Great, thank you. That helps. So we would welcome any and all questions that are coming to you, and we can go back to the applause for Jeff and his great perspective. And as you can tell, Jatasa really knows what's going on in the nonprofit world and can help with bookkeeping and advice and speaking and all sorts of, and by speaking I mean giving presentations and coaching, and so thank you very much. And we do want to encourage you to send questions either now or think about things and use Jeff's email or reach out to the National Council of Nonprofits and send questions our way after this program at any time. We're trying to, as you can tell, help the nonprofit community really get a handle on its costs for financial sustainability of individual nonprofits, and also because it reinforces transparency and the need to educate those who look to us for outcomes in the communities that costs are necessary and in fact essential to deliver our missions and programs that all of your nonprofits are so busy and effective at in your community. So don't see any questions, Jeff. Is there anything that you wanted to add that you didn't get a chance to before we wrap up?
No, thanks everybody. Appreciate your time.
Jeff, I really love that cartoon, and I just want to point out that, of course, we know for our audience that charitable nonprofits cannot make campaign contributions, but we love the Robin Hood question about where did all that money go? And that's certainly a question that those that are champions for our work are entitled to ask. Those that invest in our work may be asking, and we hope that with Jeff's good guidance today, you'll be in a better position to wrap your arms around answering those questions and really own your own costs. We just want to thank Jeff and Jatasa and his team again and remind you that we've got state associations all around the country that are resources for many, many capacity building topics and of course are bringing nonprofits to the table when decisions are being made in communities and in their state houses. We're all advocating for you and your missions, and we encourage you to connect with your state association of nonprofits. So our final slide just reinforces how you can get in touch with the National Council of Nonprofits on our social media feeds or by subscribing to our free newsletters, and I'm sure you'll be hearing more about owning your own costs in the future, and we thank you very much for being part of today's program and look forward to seeing how you all own your own costs. So thank you very much. We're going to sign off now, and just again, thank you, Jeff and Jatasa, for the terrific program today.
You bet. Thanks, Jenny. Bye-bye, everybody.
Bye.